If you've invested in cryptocurrency within the last year, you're probably one of 1 million Australians that have actually invested in Bitcoin or other cryptocurrencies in the past year. For most investors, crypto could have been your very first trade ever. Forget about the times where we would start with an ETF and look towards 40 years in the future where we'd hopefully be pulling out a couple $1 million. We've now come into a generation where a lot of people that are entering the market today are going in through Bitcoin or other cryptocurrencies. And as a result, I'm looking around and a lot of people have been asking me heaps of questions surrounding crypto that honestly I have no answer for. But one specific question, and I feel like people don't actually realize, but crypto is very similar to stocks in the sense that you will be taxed on it. So it's important to understand that you will be taxed on any profits you make with crypto. So whether you buy, sell, or invest in cryptocurrency, it's important that you understand your tax responsibilities. So I figure, who better than me, probably a lot of other people better, but who better for this video purpose to make sort of like a guideline type video of what you should be keeping in the back of your mind when investing in cryptocurrency. Now the first is pretty important. I feel as though when I've talked to people that have invested in cryptocurrency, because they are very new to the space, and I've talked about the sort of tax responsibilities on top of it, and talked about websites like ShareSite, where if you use our link below, you get a bunch of benefits. It's pretty much a tracker for all your stocks and all your crypto portfolios. And they also make everything super simple come tax time. So if you're interested in that, there'll be a link down below. Pretty much a lot of people have said to me that, oh, well, I don't really need to declare it. Well, unfortunately, if you are in Australia, the ATO is always watching. And as I mentioned before, as it currently stands, they've estimated that approximately 500,000 to 1 million Australians own cryptocurrency. And if you have an account with an Australian cryptocurrency designated service provider, DSP, the ATO is already aware of your crypto transaction thanks to the know your customer information you provided when signing up for any Australian exchange or wallet. So pretty much the ATO has a data sharing program with all Australian exchanges and knows when crypto owners buy, sell, or earn interest from cryptocurrency in a financial year. So there really isn't a way around it but to declare your crypto investments and earnings on your income tax return, because we really do want to avoid any penalties for tax evasion. Now, the second is how crypto is taxed. Now, the Australian government does not consider Bitcoin or other cryptocurrencies as money or foreign exchanges. It sees it as an asset that attracts capital gains tax and income tax. And how you're taxed varies depending on your circumstances and intent. Pretty much the ATO has laid out different tax rules for individual investors and for taxpayers who earn a regular income from, say, day trading. Now, if you're very specific, or if you have a very specific question regarding crypto and tax, I will leave a link to the ATO's website where you can put in your question and you'll be sure to find something. So I'm not going to go through this video on what happens if you say make a loss on crypto and sort of how that plays out, or if you're buying crypto with your company, the tax implications on that. I'm pretty much, for this video, I'm going to be touching base on what the average 95% of people watching this video need to keep in mind. So for taxation purposes, the ATO classifies all crypto users as either a trader or an investor. Now, the difference between an investor and a trader is that an individual investing in a future return is considered an investor. The investor buys and sells crypto as personal investment, just like you would a stock, with the aim to build wealth over a longer period of time through, obviously, profit made from long-term capital gains. The majority of Australian crypto users probably would fall under this category. Any profits earned or losses incurred by these investors will be subject to capital gains tax. So when you dispose of your cryptocurrency by either selling, buying things, trading, gifting, converting, or by exchanging for other crypto, capital gains tax is applicable. Now, generally, because you're looking at getting those capital gains, you probably won't be pulling out your crypto, but rather a year or longer. Now, because of this, the investor will pay 50% less tax on crypto gains if they hold for 1 year before disposing. Now, a trader, on the other hand, is one who is active in crypto solely to generate an income and sort of function as a business or a side hustle, whatever you'd like to call it. Now, the ATO would tax you as a trader if you're earning an income by running a crypto trading exchange, forging or mining business, or regularly buying and selling for short-term gains, which is the important one. Now, the main difference between these two is that one of them gets a 50% discount when you're selling and the other one doesn't. Now, not everyone is going to fit in the category of one or the other. It's not that you have to sign something saying that you're going to be a day trader or another saying that you're going to be a long-term holder. You can be both. You could have made a trade of crypto and held it for a year, and cool, you'd get a 50% discount on that. And then you could have, during that year, made another 5 trades of crypto and sold it with 2 or 3 month exchange, and well, you're going to be taxed the full amount on those short-term gains. Now, you're probably wondering, well, what would the rate of the capital gains tax be? Well, the percentage of CGT you'll pay if you're buying crypto as an individual investor is the same as your income tax rate. Your income tax rate will be determined by your total income during the tax year, and these are subject to tax breaks. Very simple stuff. Just, add up everything that you've earned and you will see what your income is at. For me personally, I guess I fall under day trader when it comes to cryptocurrency. I tend to hold a lot of the stocks that I buy for a long time. I don't really ever sell my stocks. But when it comes to crypto, I kind of just buy the dip, sell it when I think it's high enough, and just kind of rinse and repeat. So I would be heavily taxed on all my crypto stuff because I don't really hold crypto for the long term. But considering it's dipped now again, maybe I will hold this for at least a year so I can get that 50% discount. Now, something to keep in mind, when you buy cryptocurrency in Australia, you are not taxed as long as you purchase with a fiat currency, which is, Australian dollars, US dollars, British pounds, whatever. And the crypto itself is also GST free, but of course it is important to maintain accurate records of purchases to calculate the cost basis of the transaction when you want to sell or get rid of your crypto, because the tax will be applicable then. So if you purchase and hold the crypto, you're not taxed. Even if the value goes high, it's only when you sell that you get taxed. Pretty simple stuff. You probably already know that, but at least you've made sure now. Again, this video is pretty simple. If you have deeper questions, I'd be happy to try and answer them below. But if not, like I said, I'll leave a link to the ATO website where it can literally tells you everything. But for the average investor, that's all you have to keep in mind, really. If you're holding it for the long term, 50%, if you're trying to get rid of it really quick, day trading all the time, then you will be taxed extra. And the tax just falls on your income tax for the year. It just depends what bracket you're in. And really, if you're wanting to make your life a whole lot simpler, if you haven't done so already, I'll leave a link down below for ShareSite where you get some benefits if you click the link and actually go through us. But pretty much it's just a website where it makes this stuff easy. It shows you exactly when you bought, when you sold, everything across all your portfolios. You can just sort of link everything up. And then when it comes to tax time, if you've done a whole bunch of trading during the year, it just makes everything so much easier. So that'll be down below. If you enjoyed this video, here's a video YouTube thinks you'll like, and here is our last video.